triple-digit price of silver is a legitimate target. It's almost going to have to trade at 200 for inflation. Clearly in Asia, particularly in China, they view it as money, and of course the BRICS, and that's one of my biggest bullish factors for gold. But I think a reasonable target of 4,000. What's been the best performing investments? They'll tell you stocks and maybe bonds second. None of them talk about gold, but gold outperformed both of them. In China, on weekends, they go shopping to buy gold. Here we go shopping with money we don't have to buy things we don't need. Look at Newmont Mining.
Based on how much Palatine gets hit and how much Newmont goes up, it might be the best performing stock in the S&P 500 today as you and I record. It's number 2 right now. That means it's doing better than 498 other small cap stocks. Sam Lee was one of the best and most out of the top. North America, 2, South Korea, and Japan. They are famous around the world for making a lot of the things we need, like electronics, tools, and so on. However, all of the metals they need come from outside their country, not really because they don't have any of their own. First, I'd like to talk about how gold prices have risen to new all-time highs and are now almost at $3,600. When you add up all the economic problems the world is having, like the unsustainable level of government debt, your buying power is quickly falling. It looks like this could be the start of gold's rise. What do you think about the gold market right now? Well, someone who almost 5 years ago chose to sell all of his stocks and bonds and buy gold. They then told my financial planning group that, and out of all the clients we have, only one listened. There are still many people who are not in gold at all. And I think that's one of the main points that isn't talked about enough for a market that has actually done better than stocks and bonds since the turn of the century. While I take a short break, Jesse, think about this. Some people at the bank will take it the way it's meant to be taken. They need not. It's a big picture. Stocks are all the rage on Wall Street, but gold has quietly done better than both stocks and bonds since 2000. Even though the U.S. has $33 trillion in debt and people's buying power is falling, most advisors still think of gold as a niche asset. One client in his group did what he said, which shows how badly this market is still underowned. The World Gold Council did a study that showed that U.S. accounts have less than 1% gold on average. That mismatch is a huge boost for the upside. He then talks about why most experts don't even know about gold's history. Before I start, I want to say that after 41 years in the business, almost 2/3 of the financial planners who work today were either not born yet or were still in diapers when I started. They've only been there since the beginning of the millennium. Still, if you ask almost all of them what the best purchases have been, they'll say stocks. Bonds might come in second. They don't talk about gold, but gold did better than both of them. But as you said, there is still not a lot of interest in North America here, even though we've reached 3,600. Now, let's look at other parts of the world. For example, Jesse, I know you already know this, but in China, people go shopping on the weekends to buy gold. We're shopping with borrowed money to get things we don't need. I just think that foundation is important, even though the price has gone up. Other people may not agree with me, but I think it's worth hearing. This is the difference between generations that no one on Wall Street talks about. 2/3 of today's advisors weren't working before 2000, so they don't think about gold's long-term success. Gold has earned more than 500% since 2000, more than both the S&P 500 and bonds. Still, most U.S. buyers don't care about it. In the meantime, Chinese families buy gold every week like they would save money. People in the U.S. rely on credit cards. That difference in culture might help explain why demand around the world is so different. Next, he compares this difference in thinking to how people who didn't believe in gold threw out stocks decades ago. Most people thought stocks were dead when I started working in the business in the early 1980s. The Dow never went above or below 700 points for 13 years. The famous front page of Businessweek even said that stocks are dead. Wall Street was very pessimistic. Another young man from Gainesville, Georgia, named Robert Prector Jr., came out with the idea that that was going to 3,600. He had a theory and a way of looking at things technically that no one really knew about. He called it Elliott Wave Theory. He was just charged with calling him every name in the book. He became well known when the market took off. Then he and I both called about the crash in 1987. People thought it was impossible for it to reach 3,600, let alone a few decades later, 36,000 or more. That's how I feel about gold right now. This 36 is way out of line for people, especially those who have been bullish and made money from it. Remember how Wall Street said stocks were dead in 1979, just before the biggest bull market ever? That's still how people think about gold today. Robert Prector's prediction of a Dow 3,600 was crazy, but the average is now 10 times higher. Even though central banks are buying gold at a high pace, people who don't believe in it still make fun of it. Contrarian trades often pay off big when sentiment is bad, but facts are strong. Investors should think about whether their lack of faith in gold is similar to their lack of faith in stocks in 1982. He then changes the subject from doubt to why gold's foundations are stronger than ever. Wonderful. Gave you every reason. But how could it get much higher? It's just not possible. That's the way you have to think. It should be able to. I would even say it's not cheap anymore. Someone who bought it for $1,300 saw that the price tripled. But the main reason to buy gold has never been. We used to have control by central banks that got rid of it. They are now the biggest buyers. It was clear that no one in society thought it was money. Asian countries, especially China, see gold as money and building blocks. This is one of the main reasons I think gold will rise in value. I think countries moving away from the US economy and currency will be good for gold. To answer your question, I think it's more important to praise how well the stock market has done than to complain about things like inflation or the stock market itself. But the basics make higher stages necessary. In 2023 alone, central banks bought over 1,000 tons, which was the biggest buildup in history. In Asia, gold is still used as money, not just an asset, and the BRICS push to get rid of the dollar adds to the demand. That's like how things were in the 1990s, when Western central banks dumped their savings. Today, they're the ones setting the price. Western markets still don't fully understand how big of a deal this change is. Next, he sets a big price goal that might completely change people's views in a setting that wasn't as good as it is now. That would mean that I still think it needs to go a lot higher over time, but 4,000 seems like a good goal. Finally, keep in mind that there is no real pushback when you're at an all-time high. For example, if you choose 4,000, that's a round number, and you should know that gold has been treated very badly by Wall Street. It's thought that about half or 1% of investments have some gold in them. What would happen if people only went to 1% or 2%? For the long term, it's still a very, very good market. Really good ideas. Also, in the last 3 years, the US dollar has lost half of its value against gold. I think this shows that gold is once again becoming the most important form of money. But as you said, most people on Main Street and most financial experts don't seem to get this. It might sound crazy to set a goal of $4,000. However, there isn't much pushback at new highs. Bloomberg says that only 0.5% of Wall Street funds are holding gold, which shows how little people still own it. If that went up to 1%, there would be a shock to demand like no other in decades. The dollar, on the other hand, has lost half of its value against gold in just 3 years. But few people are aware of this silent fall. The main goal for most investors is to protect their buying power, not to call prices. He then talks about why Wall Street's lack of interest in gold may be its biggest blind spot to date. Do you think that gold is about to become valuable again? Do you think it will be important? in the future of the world's money system. Anyway, I believe it will be very important in the BRICS. They didn't buy all of this gold. Over 1,500 tons of bricks have been added since 2022, not to sell again, but to get ready for trade settlements that don't use the dollar. The U.S. still depends on foreigners to buy treasuries, but people are losing interest in long-term bonds, and bid-to-cover rates have hit multi-year lows. Now we have a quiet problem. Washington might soon need to offer more than just yield to buyers to get them to buy. Next, he looks into ways that the United States might have to change the price of its own gold reserves. Long rates, on the other hand, will only go up. I think that will find a way for the Trump government to revalue the gold it owns to the current price, and also issue bonds with some kind of gold backing for 40 or 50 years to get people to buy them. That's how hard I think it will be for the U.S. to get money while other bond markets around the world are also collapsing. Many people who watch this show might find the rise of silver even more exciting than the rise of gold, going over and staying above $40. We're almost at $41 right now. Taking inflation into account, this is very exciting. To get back to the high point of $50 in 1980, we would need almost $200 worth of silver right now. Inflation went down. There is a lot of exaggeration in the silver space right now. Big numbers are being thrown around. A lot of people on this show have said triple-digit silver. It's not a crazy idea to change the value of U.S. gold stockpiles. In 1933, FDR did it by raising the price of gold from $20.67 to $35, which made the dollar less valuable. With $600 billion in government gold holdings, even a small change in price could affect how the Treasury gets money. At the same time, silver's $41 price seems high, but when you take inflation into account, it's not even close to its $200 peak in 1980. The difference in opinion shows how skewed stories are in the metals markets. Investors need to know, for what reason is silver still seen as risky when its real high point is 5 times higher? Next, he says he has changed his mind and is now a firm believer in silver. I've even heard that some people paid more than $1,000. You had changed your mind about silver since the last time we talked. Before you said it was like kissing your sister, but now you said it was better. We're now over $40 for silver, which seems to be waking up. Are you sure we could be? The metal is about to start a big bull wave. Yes, you're right. I did a 180 and it made sense to treat it like gold was more important. But when it dropped below 30 earlier this year, I looked at the main point and saw that it had never been stronger in the 41 years I've been involved. I turned into a shiny bug. I also said it would out and lead gold for a long time. I believe that's what's going on here. I believe you make a very good point. The Hunt brothers and someone else who went to 50 and, well, to get back to that, you're right. These kinds of gifts are important. Silver has been ignored by veterans for decades, but now one is calling it the winner, which is a sign. At $30 earlier this year, silver was trading below what many minds thought it was worth, but demand from solar and electric vehicles is rising. In 2023, the U.S. Geological Survey found that the demand for silver rose 24% just for photovoltaics. If you treat silver like a second-class citizen, you're ignoring the fact that it has roles in both money and industry, which may help our success. If skeptics stick to the story of the Hunt brothers, they might miss how things work today. Next, he talks about triple-digit silver and why it's not as unlikely as it sounds. As prices rise, it will almost certainly have to trade at $200. So what I've said, which probably makes me a total silver bug, is that the price of silver in the triple digits is a real goal. To begin with, it's not that different from a double from here. It sounds like a lot because the price was in the single digits for a long time. I think it will keep going up though because gold and the stock market are both going up. I need to turn this in. A few weeks ago, I made a big change. I wasn't in the camp for when the stock market crashed. In January, I told our clients that I thought the stock market would stay the same or go up or down. I told people to stay away from US stocks and invest in world funds instead. I enjoy the Chinese market a lot, but things a few weeks ago made it clear that we were very open to a hard fall or even a crash. It might sound crazy for silver to be worth $10, but at $90 to $100, it's just keeping up with, not at all theoretical. What's more telling is how his view on wealth has changed. In weeks they went from neutral to crash watch because the S&P has tight leadership and valuations are high. This is a bad time for metals, not for competition. At the same time, China's market looks better because it is selling at half the PE of stocks in the US. If stocks fall, cash could flow into metals more quickly than most people think. Next, he talks about why falling stocks and crypto flows might go straight into gold and silver. And that has been going up against gold, silver, and cryptocurrency. As long as it's not a total crash, a slowing of the bull move or a real drop could only hurt gold and silver. Jesse, do you know how I know that? In 2013, I stopped taking on work in the mining and metals business. I put some money back in 5 years ago when I was getting very excited about gold mining stocks and other things. But in the last few weeks, I've heard from people I haven't heard from in 10 or 20 years telling me, I saw your name while looking up metals. I thought you quit the company. The follow-up question is also the same. What do you like? Not counting the small group of people we always stuck to, I think we're now at the point where we used to call ourselves the hard asset crowd. I believe we no longer say that. When old friends show up after decades, it's a sign of how you feel. Something is changing when people who haven't thought about metals for years start to ask questions. It's not the same for gold and silver when it comes to crypto. Metals are still going up while Bitcoin has stopped going up. This is clear from ETF movement. As stocks shook in August, GLD and SLV got their first back-to-back inflows in months. Not a lot of hype is behind this change. It has to do with money looking for security. There's a chance that the hard asset crowd will soon become popular again. Next, he talks about why the renewed public attention might not mean the end of this cycle, but rather the beginning of it. People in general are being told about it, which I think will also help drive up the prices of metals. In addition to the metals themselves, both the GDX and SL ETFs have seen a big rise in the prices of gold and silver stocks. It's up about 80% so far this year, which clearly means that the big indices have been wiped out. An 80% rise in GDX and sales so far this year should be big news, but it's not talked about much outside of the financial world. Gold and silver miners aren't just getting caught up. They're doing much better than the S&P 500, which shows that money is slowly moving into hard assets. Momentum traders from big companies are generally interested in that kind of performance, but allocations are still very small. If metals-linked ETFs can go up this much while still not being owned by many people, what will happen when broader funds start to pour in? As Ned Davis's study often shows, getting more people involved can make cycles last longer. After that, we'll look at why the major news outlets won't cover this protest until the people demand they do. You'd think that a showing this great would make the news about how precious metals miners will be in high demand soon. First, what do you think about the workers here right now? Second, when do you think the people on Main Street and the financial experts we talked about earlier will realize that gold and silver mining stocks are on the verge of a bull market? Well, a lot of the major U.S. financial media is connected to people who work in the financial services industry. They won't write things down, so don't follow along. You should know that they're ads. I don't think they'll write good things about that because gold and silver have been shot down by the financial services industry every time I've worked there. That won't change until the public says, listen, I'm listening, or I have this neighbor who's killing it, and so on. That's when I think people will pay attention. It's not a mistake when mining stocks go up 80% and the Wall Street media keeps quiet. It's a plan for a business. Financial media gets its money from advertisers in the wealth management business. Wealth management companies make money by selling bonds, ETFs, and managed portfolios, not gold miners. This is why miners are still seen as risky investments, even though they have done better than almost every other area. Main Street investors usually expect coverage after word of mouth success spreads. That's when things really start to change. In the past, retail imports have come late, like during the tech boom in the late 1990s. The next part talks about how traditional managers might be sucked into miners even if they don't want to be. There are two types of mining stocks: exploring stocks and mining stocks. I will talk about both of them. As I said before, when I first started investing, I sold some of my physical gold at 3,500 at the beginning of the year to buy shares in the big gold producers. These stocks did much better than physical gold. They have a long way to go before they can really print money through free cash flow. As the stock market slows down, they'll be able to say they beat the low end of earnings expectations, which will keep them going. Well, these money managers who deal with a wide range of investments will learn about these mining companies. Take a look at Newmont Mining. Maybe it will be the best performing stock in the S&P 500 today, as you and I record it. If Palantir gets hit hard enough and Newmont is going up, it's number 2 right now. The fact that Newmont Mining is near the top of the S&P 500 performers shows that there is a shift. Analysts on Wall Street aren't drawing attention to it. Most businesses have trouble meeting even the lowest earnings estimates, but gold makers have a lot of extra cash right now because the metal is so cheap. They are hard to find because they are so wealthy. To make the market more stable, buybacks and financial tricks are used more and more. If generalist managers start moving money from areas that aren't doing well to miners that are, liquidity flows could make returns bigger. As in previous rounds, miners don't become popular until they keep beating the market for a long time. The next thought looks into why mines are still so poorly owned, even with this leadership. That means it's doing better than 498 other small cap stocks. Still, I can tell you that half of people's portfolios, or 1%, have Newmont mines in them. This means that people still want to buy mining shares, so they should do well. However, where I went is the riskiest and most uncertain part of it. Remember that Wall Street made up the word speculating, so don't call it what it is, which is gaming. You need to be ready to lose some of your capital, both personally and financially. On the other hand, we'll get the most out of the junior college level. In some cases, we're already seeing that. And the reason is that the world has shrunk so much that companies can go there without taking too many risks to try to find the metals that are so badly needed right now. Also, a lot of money hasn't gone into that business. These things outperformed 498 stocks, but aren't held in most people's portfolios. This shows that there is a huge unmet demand. Institutional ownership of miners like Newmont is still very low, so any change in allocation could cause big moves. But the real power lies in juniors, which are speculative explorers with huge upside but equal risk. After decades of underinvestment, even small capital inflows can change the prices of these thinly traded names. Investors must decide if they are ready for casino-like volatility, since history shows that many juniors fail before they find metal. For balanced investments, both the promise and the risk must be seen. Next, we'll talk about why exploration that works takes a lot longer than most small owners think it will. Remember that it doesn't matter if you hit it tomorrow or just went to Iraq and drilled it. You have to look into it for a few years. No matter where in the world you are, it will probably be at least 10 to 15 years before it comes out and pours the first metal. Once everyone understands that and how we're rushing, someone made a good point to me the other day. It was Sam Lee, one of the owners of North Helicopter and Gold, which is actually the biggest stock they have. He is only in South Korea and Japan on a business trip for Canada. They're famous around the world for making a lot of the things we need, like electronics, tools, and so on. But he made a good point. All of the metals they need come from outside their country. Not really, because they don't have any of their own. A lot of the time, investors forget that it takes 10 to 15 years for even a new finding to make its way to the market. There is a fundamental supply problem because of that time lag. As the demand for electronics, electric vehicles, and energy technology grows around the world, countries like South Korea and Japan, which are industry powerhouses, have to import most of their essential metals. This puts them at risk of price and geopolitical changes. Long lead times and short-term spending needs don't always match up, which is why juniors are strategically important even when prices are volatile. Portfolio managers who don't take this into account could miss chances that will last for generations. The next part explains why major mining companies might choose to buy new mines instead of building them themselves. So now we have it. The world is rushing to get important minerals. Not a lot of money has been put into them. I believe that for some time that will turn aging companies into darlings, and the big ones won't try organic growth because their currency is so strong right now thanks to this stock. Since reserves are still good, they're going to go out and buy. Gold is being bought for as little as $20 an ounce and is now being called at $3,600 and going up. I'm sorry for the long answer, but I don't think the mining shares and expiry stocks have had their day in the sun yet. The big difference in prices between gold at $3,600 an ounce and savings at $20 an ounce is clear. Big mines whose stocks are worth a lot probably won't wait 10 years for organic projects. It's faster and cheaper to buy things. Because of this, exploration companies are now good targets for takeovers. Most of the time, retail buyers undervalue at premiums. Leverage is created in this sector by the lack of new reserves and rising strategic demand, which doesn't happen in most other sectors. What's the joke? Mainstream accounts will ignore these chances until the news finally catches up with them. That's why past wins aren't the real story here. Mains and juniors still have the road ahead of them.